Hello students, I hope you're all doing well. Welcome to another video from QuickStudy, and this video will cover business documentation from topic 2, which is Introduction to Bookkeeping. And in this video we are going to learn about the purpose of business documents and why do you really need them. Business documents include documents such as the purchase order, the purchase invoice, the sales invoice, credit notes, statement of accounts, remittance advice, petty cash vouchers, and cash receipts. So that's quite a lot of documents. So first off, as we start this video, you need to understand why do we really need business documentation. Well, as you understand that all business organizations are involved in trading, which means buying and selling of goods or services. And what documents will help you do is make the financial transactions more reliable and accurate, and at the same time you need the source documents or the business documents such as the journals or the daybooks, the ledger, trial balance, and financial statements. And these documents are basically essential to make sure that your trading is smooth. You can keep track or record of the transactions that your business incurs on a day-to-day basis. And this can also help you avoid a lot of disputes between the buyers and the sellers. And the thing with business documentation is they will usually follow a standard sequence, as you can see here. So as you can see here, the flow of source documents looks something like this. So first of all, you have the purchase order, which is a document that is sent by the buyer, order goods from the supplier. And then you have the invoice. Invoices are documents which are also sent by the suppliers to the buyers when the goods are being delivered. And this goes on to show how much amount of money the buyer owes to the supplier. Following that, we have the credit note. The credit note is a document which is also sent by the supplier to the buyer, to the credit buyer, actually, the customer who has purchased goods on credit, in case the customer wants to return certain goods and services. And following that, we will usually have the statement of account, which is a document that is sent by the supplier to the buyer, and it basically shows the transaction for the current period or month and the amount that is due or yet to be paid. And then you have the remittance advice. That is a document which is accompanied by the payments that is made by a check or via the bank's automated clearing systems, and it basically gives the details of the payment that is yet to be made. All right, now that we have talked about the different kinds of business documents that are used in businesses, let us look into these a bit more detail. So firstly, what we're going to talk about is the purchase order. The purchase order is a document that is issued by the business when they are purchasing goods or services from a supplier. And the purchase order basically acts as a legal document that the business can use to track the order and confirm if they're agreeing with the prices, and also make sure that the right goods or services are being delivered to them, and that too on time. And a purchase order will usually contain information such as the name and address of the supplier and other details like the purchase order number. So purchase order number must be assigned to make sure that you are able to track your orders for reference purposes. And then of course the purchase order will also contain the date of order, on which date the purchase order was issued, and it will also contain the details of the goods or services that the businesses have ordered, along with the quantity that they require, as well as the delivery date, on the expected delivery date that the business expects by which the supplier will send the goods and services. And of course, it will also include an authorized signature, which is basically a signature of the senior member who will be authorizing the purchase order. All right, so the second business document that we're going to talk about is the invoice. And this is a document which the seller will issue or prepare when they are selling goods or services on credit. Invoices are usually numbered for easy identification and for filing purposes. And both the seller and the buyer need to record the details of the transactions in their accounting books, right? And an invoice will usually include information like the seller's name and address, which is basically the contact information, as well as the buyer's contact information, their name and address, as well as the description of the goods and services that are being supplied. So a detailed list of the items sold or the services must be included alongside the number of goods, which is basically the quantity, and the price per item as well, which will show like what is the cost of each item or service that is being delivered. And finally, we will have the total amount due on the invoice as well, which showed how much money the purchaser owes to the seller. Alright, now the third business document that we're going to talk about is a credit note. So what is a credit note? It is basically a document that is issued by the seller to the buyer, and this is because the seller would want to credit a customer's account for the purpose that a customer might have returned some goods. So the seller would want to reduce the claim of the customer or the amount of money that the customer owes to the seller. And a credit note is actually issued for returned goods, like we have already discussed, and it includes the value of the returned goods. And as it's sent to the customer is basically informed using this document that their claim has been reduced by the seller. And these credit notes are actually often printed in red to make sure that they're distinguished from other invoices. And at the same time, a credit note will include similar information to the invoices, which are basically the seller's name and address, the customer's name and address, as well as the amount that is owed by the customer to the buyer. And of course, there might be a case of partial returns too. So credit notes can be issued for partial returns, which is basically when you're not returning all the goods that you bought from a supplier, but rather a portion of the goods that you purchased for various reasons, of course. And how do you make these entries into your accounting books? So credit notes are actually entered into the accounts books to reduce the customer's payments or customer's payments that is due, right? And sometimes the suppliers may only actually accept a partial return or may issue a credit note for a lesser amount than the value of the returned goods. So the seller of the goods might think that, all right, I wouldn't want to accept this much amount of returned goods from you. I'd rather accept a smaller portion of the return and reduce your claim by that much. If I had to give you an example, if a customer were to return goods worth £50 to the seller might want to only accept goods worth £25. So that might also be the case. Alright, so the fourth business document that we're going to talk about right now is the statement of account. And the statement of account is a document that is sent by the business to the customer at the end of each month. And the statement of account basically summarizes all the transactions the customer that has incurred between the customer and the business during the previous month. And it will usually include items such as the opening balance, which is the amount of money that the customer owes to the business at the beginning of the month. And the statement of account will also include the current month's transactions, like how many invoices were issued to the customer during the month. And it would also include the payments or the potential payments that the customer may have made during the month, which will basically reduce the customer's claims, right? And the statement of account will also include the credit notes, which is basically because the customers may have returned some goods to the supplier, which would also reduce the customer's claim. And then finally, the statement of account will include a total amount outstanding, which basically shows the total amount owed by the customer to the buyer at the end of the month. And customers should actually actively review the statement of account to make sure that the details that have been posted are correct and that all the payments have been accounted for and credits have been accounted for too. And if the invoices that have been recorded on the statement of account are actually approved for payment, and the customers can actually arrange to pay for the balance that is owing. Alright, so the fifth business document that we're going to talk about is a remittance advice. And this is basically a document which accompanies a payment to a supplier. And the remittance advice will provide details like payment details, such as the amount paid, the invoice number, as well as the payment date. And why do you really need a remittance advice? Well, remittance advice actually helps the supplier allocate the payment correctly to the corresponding invoice. And it's very similar to a statement of account. A remittance advice is similar because it shows the details of the recent transactions and the final balance that is owing by the customer. And it actually accompanies payment, which means that the remittance advice should be sent along with the payment. And whether it doesn't really matter whether the payment was made by a check or an electronic bank transfer. And then there are payments that are made using banks' automated clearing services. So the bank's automated clearing services can also send remittance advice along with it. The payment record should be included with the remittance advice. And of course, there may be outstanding invoices, which means invoices which have not been paid for yet. So it will be left outstanding and then it can be queried later on. so you will have a record on your remittance advice as well. All right, so the sixth business document that we're going to talk about is basically the receipt, which most of you are familiar with already. This is basically a document that is issued by the seller to the buyer, and it essentially acts as a proof of payment. The receipts will actually include information such as the date of the purchase and the items that have been purchased alongside the amount that has been paid for it, and whether the transaction was paid for in cash or on credit. And the receipt will also have a signature, the signature of the petty cashier or the staff member who is receiving the receipt. All right, now for the seventh business document that we're going to talk about is the petty cash voucher. This is a document that will record and claim the small cash expenses that incurs within a business. And a petty cash voucher is similar to a receipt and will usually contain information like the date on which the expenditure has taken place, a detailed description of the items purchased or the expenses that has incurred. It will also include the amount that has been spent, which should include VAT or taxes if applicable. And it will also include a signature to confirm who was the staff member who has spent on this particular expenditure. And it will also include a counter signature, which is basically a signature of the staff member's manager who has actually authorized the claim of the staff member who has spent the money. And of course, petty cash vouchers are important as it helps track and reimburse small payments that are too minor to be processed through the central accounting system. So these expenses are usually small expenses, like expenses for travel or stationary purposes, and they do not really find a place in the main cash books or the books of accounts. So they have a separate petty cash book, which is we'll talk a bit more into detail about that later. And the petty cash voucher is typically submitted to the petty cashier for reimbursement purposes, right? So every business will have a small amount of money allocated for their petty cash expenses on a weekly or monthly basis, which is reimbursed after a particular period of time. And if the claim actually exceeds the authorized limit for the petty cash, it would have to be referred to a higher authority, which is basically a senior cashier or an accountant at the business. Alright students, with that we have come towards the very end of this video, and to give you a short recap of what we have covered so far, we have talked about the purpose of business documents, and we have discussed the various different types of business documents, which includes the purchase order, purchase invoices, sales invoices, credit notes. We have talked about statement of accounts, remittance advice, petty cash vouchers, and cash receipts. And students, with that, I'd like to thank you for watching this video. And if you've liked this video, do subscribe to our channel as we post regularly on different topics and subjects that can help you ace your GCSEs. And of course, if you'd like to know more about us or our online tutoring services, do visit our website at www.quickstudy.uk. Thank you.